Yo, what's up, you guys? Welcome back to a new weekly market breakdown where we basically take a look at the market and look at what we kind of can expect going into the new week. Just an update, these two email addresses is no longer in use. I will be using just this email at the bottom. So these two ones you would have seen in the previous videos that I done, they are no longer being used. I'm only using these ones. The website is also, I've taken the website down for now. It will probably be back in a couple of months, but I'll keep you guys up to date. If you have any questions, you're more than happy to just use this email address here at the bottom. If you have any questions for me, please use this email. These two no longer work. Now, without any further ado, let's jump straight into it. Now, the first things that we are going to take a look at is news events coming through this week. First thing is we've got CPI, we've got double CPI month over month and year over year. We've got core CPI month over month, and then core CPI again, then core PPI month over month, then a PPI month over month. We've got the interest rate decision for the Feds. You can see they expecting the Feds to keep it at the benchmark rate of 5.25 because that's what it is now. So there's no expectation for the Fed to basically hike their interest rates. We've got some core retail sales. So this retail sales, we've got the consumer sentiment coming through on Friday. This week is going to be such a busy week for the dollar index, and if the dollar gets affected, it basically drags everything down with it. What we're going to do is obviously look for the best probability setup. I cannot forecast these news events before they take place, so I'll probably on Wednesday do another breakdown based off basically these events over here, because depending on what the CPI is, it will give me an indication of whether the Feds are going to hike interest rates or not. Now, next up, what we do know firstly is at the stock market coming from CNBC, it says here the S&P 500 notches fourth straight positive week. That's its highest level since August. There we go. Now it says here the S&P 500 went up on Friday, touching 4,300 level for the first time since August of last year, as investors looked ahead to the upcoming inflation data and the Federal Reserve latest policy statement. So basically waiting for the CPI data, which is the consumer spending index, which measures what consumers spend on a basket of goods and services. That data is then being used to measure inflation, and then inflation is then monitored to decide whether the Feds are going to hike interest rates or not. It says here the broad market gained 0.11%, closing at 4.298.86. That it's a 0.16%, and then we had the Dow Jones up 0.13%, and the Nasdaq, I believe, was up 0.14%, which is small if you think about it in percentage gains, because a lot of us would like to make 100% of profit in a single day. But enough about the markets. We also got the gold over here. It says gold heads up for best week in 5 on Fed rate pause bets. Now you can see how this basically falls into this. So there's a lot of high hopes that the Fed is not going to hike interest rates. When the Fed does not hike the interest rate, the price of the index does not increase in value. This discourages investors to basically put more money into the index. That's why they would rather go to reserves, like gold reserves there as well. So it says here gold is on Friday on a stronger dollar and higher heels, but was set for its best week since early May after weaker jobs data bolstered best for the Federal Reserve to hold the pat for the interest rates, which is the coming week there as well. You can go through this entire article. I'm not interested in it at the moment because I understand how fundamental data work and what the driving process behind it is in order for us to decide which way the market's basically going to go. Now, we are going to talk about the index firstly. Now, the index last week was very bearish despite the fact that we had any high impact news, which basically gave me a nice hiding last week. But I've been in this game for 11 years now, so I understand that, you're not going to have that months where you basically just come in here and you're smashing it out the park. So sorry about that, good friends. So basically what we had over here is we had an index that was basically stuck within a consolidation. Now, I was obviously anticipating the market to break out right, and then go slightly higher, hit that level before we could potentially see a pullback, because that is the previous high that the market had created there as well. So I was expecting, after seeing the market printing this inverted head and shoulders pattern, I was expecting a bullish continuation on the index for the market to hit that level, and then maybe start that consolidation phase as we were going into next week's data there as well. But what we have over here is typical market manipulation. So the first thing that we can identify over here is we're a market that had printed the level of resistance, broke above resistance, tested it as support, then went up, came back, did not react to support. The market basically broke and closed below that. Now, as a general rule of thumb, if you get a daily close below a level of support, that means the structure was violated. By definition, you expect a retest and a continuation to the downside, which is exactly what one would have thought the market had done. But as you know, and well as I do, what the market does is that it prints support, then tested it, prints resistance, tested it as support, break below support, doesn't test resistance as, you know, I can bet you next week the market's going to break above this level and then continue that move to the upside, because we would then have the confluence once again, not only of the inverted head and shoulders pattern, but we'll have this liquidity run that we had below this support where all the buyers came in, which was me included, because I was having some sells on GU and still on AU there as well. Now, there's two ways this can obviously play out. We have to be reactive and not predictive. There's obviously the possibility of this market, you know, continuing this move to the downside, but that would be the most obvious thing for the market to do. However, alternatively, a clear break above that level will give us basically a move back into this consolidation phase that the market had created there as well. Now, which way is the market going to go? We would need to wait for a daily close on Monday. If we get a daily close above this level, then, you know, my thought process behind why the market did all of this is exactly correct. Alternatively, if we do continue lower, this would basically just be simple price action, break of support, testing it as resistance. But the reason why I do not expect the market to just move lower is because we have a lot of high probability news coming through this week that could send the market either ways. Next up, we have the Nasdaq. Now, the Nasdaq 100, again, anticipating this move to the downside, because we expected the market to come back to hit this level we expected the market to break above this level of resistance and then come back to test it as support. Clearly not the case. What we had was a market that had basically gone back into this consolidation phase. Going into next week, we are going to start with this move to the downside. That is about as far as I can go with this until I see the CPI data as well as the federal, as well as the Fed's interest rate decision. Then from there, I'll give you guys another update on this also. Next up, we've got AUD USD that is currently testing strong resist support, that is now acting as a level of resistance. I do expect this move going into next week to the downside from AUD there as well. So I do expect the market to pull back, hit that level, and then from there, once again, monitor the price action. Next up, we do have gold. As you can see, this market hasn't moved as much, but as a retail trader, we want to get a piece of whatever it is that the market is offering. So this is basically where we are. So you can see here the market has come into this consolidation phase. We've been consolidating, and this is what I explained in the last video. Markets normally consolidate due to uncertainty, right? When the market doesn't know what the next news update is going to be, and here you can see markets are waiting for the Feds to announce the interest rate decision before we can either see gold start to melt to the downside, or gold could potentially continue higher. So again, this all depends on what's going to come through by the Federal Reserve decision on Wednesday. Next up, we've got the Dow Jones. Now, the Dow Jones obviously also had this clearance move to the upside, printed a massive impulse. The correction, apart from the correction, we also then broke above this previous level of the resistance that got tested as support. You can see how the market beautifully tested and rejected this level here as well. Now, if we go and have a look at the current price action that we have over here, we can see the market had printed very, level of resistance. And apart from the resistance, the market also broken above this resistance, came to test it as support. Now, going into next week, I do expect the Dow Jones to continue this move to the upside. And that's about it. We have to see what the interest rate decision is going to be in order for us to make a long-term move. And then from there, basically, these are still things that you can trade basically going into this week there as well. Guys, that is it from my side. Like I said, do not use those email addresses any longer. The website is also down. The website will probably be back sometime next year. So please do not use those emails. Do not visit the website. If you have any questions, just feel free to ask me via email. Yeah, that is about it. That is it from my side. Thank you for your time. And as always, cheers for years and enjoy the rest of your Sunday.